The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we started the holiday shortened week on Monday, the talk in the cattle complex is Tyson Foods closing its Lexington, Nebraska beef processing facility. That sent cattle futures down the daily limit from the open, and they stayed locked that way throughout the entire session on Monday, with cash bids being pulled off the table and more. Meanwhile, in the grains and oilseeds, pretty quiet day in that pre-holiday kind of action. Let's talk markets. Joining us for a conversation, Christy Van On. She's with Van On and Company. Christy, happy Thanksgiving to you and yours. It's good to have you back on the show again.
Yeah, thank you.
Well, let's start with the cattle. I think that's the big story of the week so far. Ever since we got the news breaking on the wires Friday afternoon, it's been all over that Tyson Foods is closing its Lexington, Nebraska facility. And obviously, this is something that we don't know where the markets are going to take this from Monday, but definitely could mean some volatility here ahead of the holiday. And two, there was an on-feed report on Friday, so that might have even been a factor as well, Christy.
Yeah, so I think, the cattle on feed, I thought it was actually maybe like neutral to slightly friendly, so I wasn't too concerned about that. But obviously, this plant closing, that's a lot of cattle that we are now not going to process. And so I just think that the market, whenever you have these kind of stories involved, scares people out. And that's one of the concerns with cattle is that it is thin enough at times that this is what happens, and it can lock limit for multiple days. And that is really hard because then you start to create this this panic that people are like, get me out, get me out. And then that can cause even worse issues for extending it multiple days. I kind of had this conversation on Friday, with somebody that had cattle out in their account. We went back and forth. I'm like, here's the thing: you need to realize the risk of locking limit. We were lower and then worked our way gradually off those lows on Friday. But I was like, these are the real concerns when it comes to cattle. And you kind of were a little bit bummed because cattle continued to go back, and we were out. But this is the reality of it, is that you're looking at trade today and saying, thank goodness I'm not part of this, because of that aspect. And I've seen this happen before where you have people stuck for multiple days and those losses really start to mount and that panic does happen. So I think that's a little bit of what you're seeing right now is more panic than anything. There has been some talk on the back end, just, if you're not going to see this border open with Mexico, Mexico is going to start working on some form of meat packing facilities themselves. And you start to worry, is that the dynamic that's going to switch? Is that, are you going to see that just happen over there, finished product come over to the US versus, seeing the live animal cross the border? And I think, anytime you get those emotions and everything set aside, it just puts a little panic in the market. And we do know that this is Thanksgiving week, and Thanksgiving week can be light on holiday trade. And so I just think it's that perfect storm that you're seeing that come to these cattle markets.
I'll throw in too last week's removal of Brazil tariffs by President Trump. That was something that was, I believe, on Thursday. And so, what stinks for producers here, I think, Christy, is that it hasn't been that one black swan event. I feel like that has really hammered these prices. Now it's clearly kind of shaping up here that this is multiple things, some of which may have been able to be avoided, some not so much, but it's now multiple things in a short amount of time that has really just completely hammered this cattle complex. And I don't think there's an easy answer here. I think the biggest thing is try not to panic as much as you can, to your point, and take a step back, reassess, figure out your risk management, and get a game plan together, I think, Christy.
Yeah, and I think, the big questions we probably won't know this week, but probably next week because of holiday trade is, does this even correlate to the cash side of things?
Yeah.
In the past, we've seen that the futures board has really, really struggled, but cash has not dropped off that much. And so there's that separation there between the two of them, which is just an indicator of the fact that, demand remains there and inventory is tight. And so hopefully the cash does it. But when you said hammered, that is one of the logics I like to use. My kids like to play this game. I grew grew up playing that game, but break the ice, right? Where you're like tapping on the ice a couple different times and it budges a couple times, but eventually it just completely falls from under you. And I think that's what we're dealing right now is that, like you said, wasn't just one black swan. It was multiple sets of information that finally you're just saying, all right, this is it. We did a good job shaking off on Friday the Brazil tariff conversation. And I think some of that was the fact that, yes, you might have this resolved, but it's going to be a while before we can see that beef come back in. And it still doesn't change the dynamic domestically here in the US for our inventory issues. And so that's where I think the buying came back in on Friday. But now this has just seemed like people are panicking and probably been scared a couple different times here over the last couple weeks that they're like, just get me out. I don't want to be part of this.
Well, you mentioned the thin, quieter holiday trade, and it already appears that we're doing that in the grains and oilseeds here to start the week. Let's go over to that side of the conversation. And really, just not a lot of movement here on Monday's trade action. We know harvest is wrapped up, and we're getting into that holiday time frame where there's some repositioning, things of that nature. I think it's safe to say a lot of the grain that is in the bin is locked away now. Your thoughts first on corn. What are your thoughts there as we head towards Thanksgiving?
Yeah, I think it has been light holiday trade as well. And, you just got so much information. And now we're kind of stuck here with, once again, a lack of information. So we've traded off what we wanted to trade off of, got a setback, almost 20 cents off the spike high for corn. And you're quickly approaching levels that we've looked at wanting to be buyers off of, which is somewhere around that 415 to 420 or around 432 off of March futures. And that's where we're looking at wanting to own back some of our sales that we've made over the last couple of weeks or roll down puts or look at being purchases of calls. We got close to that overnight trade and then bounced off of it. So that's the level we're looking at. Seasonally, you have just a little bit more time of downside pressure for corn. But when it comes to the cash side of things, what I would be focusing on corn is that last half of December, I feel like could be a key spot for some movement of corn. I just think, like you said, it's locked away. It's in the bin. If you put it on the ground, it's the last thing you want to think about right now is moving that corn. And so I do think that you could see that basis push in the last half of December. Friday is first notice for December futures. So pretty quickly, they're going to be going off of March futures if they aren't already. So next week, if we're off of March futures and you can see the basis shift from December to March and not completely widen out on that carry, I think that's a win. I am concerned that with just the acreage that we have for corn and the yields that, there is going to be plenty of corn to sell throughout the year. That doesn't mean necessarily that you can't get a rally. I just think that you're going to see that selling pressure and you're going to see kind of basis be able to, unless you're a pocket that you didn't have at basis, be able to stay a little bit on the wider part of things because of that. And so I would really be eyeing that last half of December for a delivery and really pay attention to the basis there.
I want to come back to soybeans. I want to talk about wheat, though, here real quick, because you brought up a great point with December contracts here this week. That also applies to the wheat complex. And it just makes for an added layer here of your risk management if you need to get out of some contracts or whatever the case is here ahead of Friday. Same applies to front month wheat contracts right now, Christy.
Yeah, absolutely. And wheat is at a level that desperately needs to hold here. So we are really at some key support lines that need to hold. And if we can't hold that, I'm just very worried that you could see one more leg lower here in wheat back to those lows. And really, when you talk about, the wheat market is one of those ones that I think has the most to lose from switching contracts. So when you have large carry markets, they call it like carry decay or, that's when your December goes off and then your March or whatever is your next contract. Let's talk wheat. So we're saying March, that March eventually finds its way back down to where December was, giving up that carry that was there. And so I'm concerned that if we're not holding that support line or we roll to those, that eventually you'll bleed yourself lower to where December is. So really focus on those deferred contracts. The carry is there for wheat right now. It's not a great price, but I am concerned next week you'll start to see that happen.
What about soybeans? As you look at that complex, we're still hanging futures contracts here, kind of in the low to mid 11s. And, traditionally we don't like to stay there. So, I mean, what's your feeling in soybeans as we near the holiday, Christy?
Yeah, 11s is not a place we typically stay in soybeans very long. You're exactly right. I've said this before, I'll say it again, and people probably think that I'm just a Debbie Downer about this, but I have some serious concerns about China living up to their obligations and commitments. I really worry about it. I think that they've bought probably like 16 to 20% of their commitment for this year so far. And, when soybeans really started to drop back off, President Trump came out and said, hey, no, they're going to be buying this spring. Don't worry about it. And I just question like why China would buy in the spring when they have Brazil's beans coming their way, unless Brazil has a huge crop problem, which Brazil is kind of in our predicament right now for corn, is that the acreage planted makes it so you can't really get too big of a problem. That doesn't mean that I don't think soybeans can rally by any means. It just means I have some serious concerns about banking on China stepping up and buying their full commitment this year. Typically, they shut off pretty soon. And so you're asking them to buy extended out of their window. You're asking them to buy soybeans that are higher priced than what they could get in Brazil. That's just a lot of asks for countries that really aren't friends. And they've been pretty quiet about the commitment altogether. So I would say you're looking at the situation and you're using a scale up marketing technique for soybeans. If you break out above $12, you could always look at some long-term re-ownership strategies if you really want to. But I am treating soybeans as a marketing opportunity on rallies.
We're having a conversation with Christy Van On. She's with Van On and Company here today on Market Talk. Always a reminder that risk of trading futures and or options can be substantial. Christy, I'd like your thoughts on this too, since we're on the grain topic here and thinking about, you mentioned China and trade, a lot of question marks, a lot of unknowns there, but also I think some question marks on the December WASDE report. We got the November report after the shutdown. A lot of folks were kind of scratching their head at some of those numbers. And, typically December, USDA doesn't make any changes. But I think it's fair to wonder if they might have some tweaks to the December report ahead of the usually very big January report. What do you think about that?
Yeah, I am split on this because I can completely see where you're coming from and agree on that, but also I can completely see USDA being like, I don't want to say lazy, but just saying, hey, you know what, let's just get to January. Let's just get to January and finalize stuff there, right? And so I
Sure.
can see both sides of it, but what I think you're hinting at is that the November report could have just been some reused numbers since they released it so quickly after a government shutdown, and they had planned on releasing it before the government got back open. But still, what kind of information could you really gather from individuals? Who did you have working to put this information together? And so I don't really trust a lot of the numbers for November, but the big question is like, will they make up for that in December? Which is your question. I don't know. USDA is really treats this December report as just a kick the can down the road and adjust and make your big splash in January. So I'm concerned about that. What I will say though is that there is a very, very large feed use number plugged in for corn right now from USDA. And so I would pay very close attention to that. You're asking corn to be for feed use be over 600 million bushel higher than last year. We know that inventory numbers have not increased enough to justify that. And so, as those conversations about great exports, strong demand, that is very true. Those conversations about, do we think yield can come down? I think that yield still has to come down some. But you have a very large amount of feed use that can be one of those offset factors that I think USDA needs to start acknowledging sooner rather than later, that any sort of, drop on yield will be offset with a drop on feed use, that we're still stuck around this 2-1 carry out and not getting anywhere. That is a huge, huge focus of mine moving forward, is that feed use number. And I would hate to see USDA come into the December report, not adjust yield because they know they need a final one here in January, but do something with feed use. And then we see it increase in carry out. I'm hoping that doesn't happen. But I do think that is a fear that actually needs to be acknowledged and talked about more.
I think another thing to think about as well as we get ready for the month of December, there's not really a weather story in South America right now. We don't know if there will be one or not, but that's going to be a big market influence here for us December, January, February, and even maybe a little bit into March as well, Christy.
Yeah, usually you get a couple scares here and there, to give yourself a little bit of a boost here. But just I'm treating if we can put together a weather scare out of Brazil as a marketing opportunity because they are, like I said, similar to where we are. There is a lot of acres to be planted in Brazil. That makes it really difficult to have a small production number out of the country as a whole. So just pay attention to that. But yeah, your focus is definitely shifting here moving forward to be paying attention to that. And as of now, I don't see anything that's overly concerning. You did have a little bit of a dry stretch. You did get a little bit of less precipitation than anticipated here this weekend. But overall, I think the market's looking at it and saying, unless you can prove something big to me weather-wise, we're going to let this ride.
Well, final thoughts as we close out the show today. Any risk management reminders you would have for folks as we head towards Thanksgiving, Christy?
Yeah, I think the big thing, that basis at the end of the year push, I do think that you can see that something to focus on. I also just think that, continue to work some orders here, either in your account or at the elevator. We just never know what can happen in overnight trade and see those spikes. Like you said, hard to believe corn's already 20 cents off of its spike high. And so those are things to look at those marketing targets and kind of put them in and know what you have to sell over the next couple months, because I am concerned, into that last half of January into February, you're going to have people unloading some of that corn for cash flow purposes. I also have not heard a lot about a payment to farmers. I don't know if you have, Jesse, but is that actually going to come? I know a lot of people were talking about that and banking on that payment coming their way. If that's not, you're going to see more grain be sold.
Oh, that's a good point. And the only whirlwind or, swirling rumors I'm hearing is maybe something in December on a potential farmer payment. We'll see what happens there. Christy, always enjoy the conversation. If folks want to reach out and talk with you and the team there at Van On and Company, how can they do that?
Yeah, you can call us at 1-800-648-5494.
And I know they can also find you online, vanonco.com. Christy Van On, she sits with Van On and Company. Always a pleasure. And again, happy Thanksgiving to you and yours. Thanks for joining us today.
Yeah, you too. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.